The description of this session is the future of financial services and the FinTech disruption. I guess the best place to start is to say that I don't think FinTech is disruptive. I think it's serving markets that were not served particularly well before and building new models of embracing new market segments that weren't embraced before. What do you think, Matthias?
Yes, right.
Okay.
No, it's being provoking a little bit on this side. Actually, I think that FinTech is a very positive development all in all, and I'm very glad that this is happening. On the other side, I do not really think that this is disruptive at all, because disruption, as much as I know the definition of disruption, contains a mass factor. And today I have to say that FinTech is not mass relevant. So I'm totally with you. It is absolutely not disrupting. If I accumulate all the customers of FinTech companies, actually it's not a big number. So we really maybe have to think about what is FinTech in truth or in reality, what is really making the difference. And then, yes, we come to the point, actually, maybe it is more about serving unserved markets, financial inclusion, and so on.
Yeah, I think that's what I'm getting at, that if you look at peer-to-peer connectivity in particular, then it's embracing unbanked and underbanked markets. It's looking at student loans, small business loans, credit markets that weren't getting credit before from the traditional institutions. But the core of banking is still dominated by the core banks.
Yeah. And banks themselves call this that the FinTech companies, use us, the banks, against us. So, which means that FinTech companies are using the infrastructure of a bank in order to offer their services, which is clearly needed, that they use the bank because with one or more parts of their value chain, they are tapping into the regulation. So they need the support of a regulated company to compete with this regulated company, which is a kind of odd situation, isn't it? So I think one step or one direction actually is FinTech have to take to think in a way stronger way about regulation. You might know that Fidor Bank, of course, having it in the name, we are a regulated bank. We are absolutely chaptered in Germany for a European license. We did decide back in 2007 to go for this license in order to have a full grip around the customer, to get the full lifetime value of the customer and to take full responsibility of what we do. I do not think that it will be a sustainable business model once a FinTech company is not taking the full grip around the customer and not taking the responsibility by avoiding regulation. Regulation is the name of the game in financial services, so I think to make it really sustainable, you have to go for that.
And you've got new banks that actually are real banks, like Atom and Starling and Fidor, Solaris. Then you've got banks that are bank-like banks, which is number 26, Loot, for example, that are using Wirecard, Holvi. So why would you want to be a full bank and launch a full digital bank offering when it's going to be very hard to dent the core banking markets? You were just saying you've got about 115,000 customers after, what, 7 years, 8 years?
No. In the 6th year now.
Okay,
yeah.
But it's still a small amount compared to the German markets. Commerzbank has 60 million customers.
Yeah, come on, you cannot compare it to Commerzbank. Actually, Commerzbank accumulated the customers from other dying banks, you know.
They bought
so that's a state-owned bad bank, if I may say so. And I would totally refuse to get compared on the one side. On the other side, you mentioned we act like banks, but we are not a bank companies. I know at least one out of those guys who is applying, or this company is applying for full banking license. And they are facing the challenge now of integrating a banking culture into a FinTech culture, which will be a very exciting exercise actually, because they have to hire now at least two acknowledged by the German regulators, acknowledged executive board members. Just imagine you walking out of a traditional bank, you've been in charge for compliance, and you now hire on as an executive board member into such a FinTech company. I want to be a member. I want to be just sitting there listening to the board conversation. That will be really exciting. It is probably as exciting as you talk about FinTech in a traditional bank. So by the way, I think if we talk about FinTech and in this environment here in London, in this great place, and by the way, in this real great event, I'm totally impressed. We have to talk about culture. What is the culture I need to make this happen on the one side? What is the culture that is bridging innovation on the one side and regulation on the other? Why, and your question was, and I'll come back to that, why is it?
I was waiting.
You know, I'm married, I'm happy to have
He's the most talkative Bavarian I've ever met, by the way. So.
I'm happy to have the chance for free speech, actually. No. No, but why did we go for banking license? Because only if you are in charge for the full process, and you can only be in charge once you have the license, you really can improve a product, a process, an infrastructure. You can really improve it. If I am a company only running an app, with full respect, but only running an app on top of an existing infrastructure which is not owned by me, not run by my license, I have to eat what they serve me. If what they serve me is not good food, I have no better one. And this is why I would say, actually, I put all my strategic eggs into a basket I'm not owning. Mm-hmm. This is why I would, for strategic reasons, go for a license. And by the way, you know, I'm quoting the English, saying an app on an old infrastructure, that's just lipstick on the pig. So that's the problem.
So you're saying all the guys out there creating great user experiences in partnership with banks are just putting lipstick on pigs?
Yes.
Oh, they're very attractive pigs, though.
Well, depends on how to define attractiveness. It can be, of course, a short-term attractiveness, that's right. I think if I really want to create a sustainable corporate value, I need to be in charge for the full process. In financial services, I only can do this once I have the license, full stop. It's not me setting these rules, it's existing regulation and framework.
Let's talk about that a little bit more, because if you look at the technologies, what I'm talking about in my speeches a lot these days is the back office is being fundamentally attacked by cloud, data analytics, and blockchain shared ledger structures. How do you see that playing out? I mean, if you're looking down the stream, the core back office infrastructures are changing, aren't they?
Yeah, absolutely, absolutely. And what banks, and this is, I think, why the amount of people today here is so impressively high, because, Chris, remember, 3 years ago, if we would have made that, maybe 70 people would have been around. I think, yes, it's tremendously changing. And what I think that the crowd is realizing is that tech, on the one side, you know, remember, we the older ones remember, tech only was used to decrease cost. That at least was the entry of discussion, because it didn't happen. So tech was used to decrease cost and maybe to increase efficiency and so on. What I think that FinTech brings to the game for the first time is that we realize that tech can be used to increase a unique selling proposition. And it's adopted by the customer. And with the smartphones, we have the chance to directly transport this to the customer. So, of course, the FinTech scratches, out of my perspective, scratches the surface in delivering nice UX to the customer. That's the one part. But again, that's the lipstick part. But we have to think about the pig. What is about the pig? We have to change the infrastructure. We have to get this done. We have to increase efficiency dramatically in there.
So that's the big challenge for the incumbent bank, to change that core back office, because it's full of legacy.
Yes.
That's also the opportunity for the new full-service banks like Fidor and Atom and others to potentially build a new business model based on apps, analytics, APIs, and all this capability. And do you think they can effectively compete with the incumbents?
So I think, maybe I'm not answering this directly, but I think that this is exactly, once you want to enter this market scenario on a sustainable approach, and this includes quality growth, as we call it, actually, because you're criticizing my amount of customers I'm totally proud of.
They're all lovely.
Normally we talk about football, but since we lost the last game, we can't speak about that. So is there any English team still in the Champions League? Yes, there is.
Yeah.
Yeah, okay.
Yeah.
I'm just double checking. So, but if you want to deliver a real innovative service that is kind of having straight-through processes and delivering what we call, for instance, 60-second banking, which means you can, as a customer of Fidor Bank, you press the button on a Sunday night and you get a loan shipped the next second, all right? On a Sunday night, no matter where you are, and so on. This is 60-second banking to us, and this demands clearly an infrastructural answer to a question how to approach the market. If you're dealing with this infrastructure, or let me say it in other words, I think it's absolutely necessary to deal with this infrastructure, no matter, by the way, what in the background is maybe in the core banking environment happening. This can be then solved via blockchain in the future and so on. But you need to think about your infrastructure first and not only your presentation layer or customer UX.
But a lot of it's to do with actually understanding the technology opportunity. And in the incumbent banks, most of the senior bankers aren't technologists. They came from risk, compliance, finance.
Right.
There's an Accenture survey that said that only 3% of bank leadership had a technology professional background, as in being a CIO or equivalent. Isn't that a problem?
It absolutely is, and I would say this is exactly the challenge to be tackled. You know, I'm more always from the market side and marketing side. And in the old days, the first bank we set up was a European continental. So European and continental can be the same in the future, isn't it? European continental discount brokerage company and bank, and we had a IT executive board member. And I, as the CEO, always felt a little bit blackmailed by that guy, because he said to me, listen, if you don't give me 50 million euros a year, I cannot guarantee the organization and operations, so it is up to you. Give me the money or I do not guarantee. I did not find this to be a very comfortable situation actually to be in particular being the CEO. So I said, listen guy, if you make it for 30 million, we are in the game. If you make it for 40 million, have a look for a new bank. And we made it for 30 then. I think what the biggest change in the executive boards is that chief decision makers need to have a clear technical understanding. No way out. No matter in which position you are, you need to know at least at a minimum what is happening and driven by technology. I had to learn that we program in Ruby on Rails. I had to learn the meaning of an API. I had to learn what it means to have a two-speed infrastructure. I had to learn what the layers are and what the differences are, because I, as the CEO, make those decisions and co-create those decisions. If I, as a CEO, have no tech understanding on the one side, have not a clue how to create a USP with technology, I'm not in the game in this environment.
So we're already almost running out of time, and we're meant to be talking about the future of financial services. Yes. So let's finish with a view about around 5-10 years out, how things will have changed. I think you'll still have a lot of the existing banks, the big banks, they'll still be dominating in terms of core deposit account holdings, but you'll have a completely restructured system around that. So SWIFT will change, Visa, MasterCard are changing to move towards cloud and shared ledger structures, for example. Equally, you'll have new market areas like the peer-to-peer markets, which will provide lending to small businesses, students, and market segments that were underserved. I'm not sure they'll take the core bank credit markets, they'll take some of it. And then finally, I think you'll have a lot more financial inclusion through mobile services. Would you agree with all those? And what else am I missing?
Totally, as always. No, seriously. I totally agree on that. No, really seriously. I think I have not a perfect view now, and nor do I have a crystal ball actually in which I could look like what the future is looking like. But I just could think that if a bank wants to be a part of the future, of course it has to take care of this technological development in any meaning, and don't delay that. First of all, on the other side, it needs necessarily to change your corporate culture. Otherwise, you can forget about technology. If you do not change the corporate culture and you do not set up an infrastructure, a cultural infrastructure that is allowing to deal with it in points of decision making, speed in decision making, and so on, forget about it. And think about, Chris, help me on my English, micronizing, making it smaller, delivering small pieces of financial services in split seconds, and forget about thinking, out of my perspective, provoking, forget about thinking in this 10-year time frames. This is so boring, In the meantime, like the 10 years are over, the customer forgot about you, but you're still excited because you're waiting for the 10-year durations and so on. Forget it. You must think about 10-minute durations. If you want to become a relevant bank again, you need to be digital. And by being digital, you can be contextual. That's the only future.
Yep. And I guess in conclusion, I think the key message you're sending, and I agree, is that it's the cultural change. Yes. And you can't change a culture by no one leading that change, and it has to be led from the top of the company. You can't delegate it.
and there's nothing new. And the internet is not bringing any news to this. The internet, out of my perspective, only makes it very, very visible once there is a rotten culture or once there's an inappropriate culture, in specific also to this subject.
We have to finish there, but thank you very much, Matthias.
Chris, thank you. Thank you.
Thank you.